Hello everyone, welcome to the market opening bell on Monday, September 8th, your 10-minute guide to the stock market. According to mainland media, policies to expand service consumption are expected to be launched soon, boosting the Hang Seng Index, which opened 77 points higher last Friday and later surged 413 points to 25,471. It closed up 359 points or 1.4% at 25,417. The X-share index rose 120 points or 1.3% to 9,057, and the Hang Seng Tech Index gained 108 points or nearly 2% to 5,687. Total market turnover was 299.9 billion Hong Kong dollars. Southbound trading volume reached 151.2 billion Hong Kong dollars, with southbound net inflows of 5.623 billion Hong Kong dollars. Net buying included Alibaba at 2.144 billion, Meituan 1.953 billion, Horizon Robotics 1.438 billion, BYD 890 million, Xiaomi 693 million, Tencent 435 million, SMIC 390 million, and Hua Hong Semiconductor 351 million. Net selling included three bios, 576 million, Kuaishou, 575 million, Xtelpie, 192 million, and Yangtze Optical Fiber and Cable, 114 million. Statistics show southbound funds have net bought Alibaba for 11 consecutive days, totaling 19.522 billion. Xiaomi for 3 days totaling 2.094 billion, and Meituan for 3 days totaling 3.049 billion. Last week, the Hang Seng Index rose 340 points or 1.4%. The X-share index gained 109 points or 1.2%, and the Hang Seng Tech Index increased 13 points or 0.2%. Technically, the Hang Seng Index faces resistance at 25,700 and support at 25,000, remaining in a consolidation pattern. A-shares surged in the final session on Friday, recovering all losses from the previous day. The Shanghai Composite Index rose 1.2% to 3,812. The Shenzhen Component Index climbed 3.9%, and the Chinex Index soared 6.6%. Mainland media reported that new policies to expand service consumption are expected soon, focusing on increasing high-quality service supply. These include boosting inbound consumption with premium tourism routes and services, prompting orderly opening in sectors like the internet and culture, and including camping, homestays, property services, and internet plus healthcare in the encouraged foreign investment catalog. The renminbi central parity rate against the US dollar fell 12 points to 7.1064. This week, China will release key economic data, including August trade figures, new renminbi loans, social financing, CPI, PPI, and FDI for the first 8 months. The Ministry of Industry and Information Technology and the State Administration for Market Regulation issued the 2025-2026 Stable Growth Action Plan for the electronic information manufacturing industry. The plan aims for high-quality development in sectors like photovoltaics by addressing involution competition, curbing low-price competition, and guiding orderly industrial layouts. Photovoltaic and lithium battery stocks surged. Anti-involution efforts in the photovoltaic sector are progressing with top-down guidance and industry self-regulation. Positive market signals have emerged. Since July, polysilicon transaction prices have rebounded, with prices rising further on September 1st to 55 yuan per kilogram for wrought silicon and 49 yuan per kilogram for granular silicon. On August 25th, CR Power's 3 gigawatt module procurement saw bids above 0.7 yuan per watt, higher than the current mainstream level. However, the silicon material and wafer Segments continue to face deep losses, with net margins exceeding negative 10% for most firms. The battery and module segment show some improvement but remain unprofitable overall. Recovery depends on sustained demand improvement and steady progress in silicon material storage plants to rebalance supply and demand. Mainland media reported that Xiaomi declared this year as the starting point for its home appliance and new retail business expansion overseas, aiming for automotive exports by 2027 to advance its premium brand strategy and global human vehicle home ecosystem. The company plans to build 10,000 overseas Xiaomi home stores within 5 years, creating a highway to global consumers and enhancing international service capabilities. Huawei recently launched its new triple foldable phone, Mate Xt's Ultimate Master. AAC Technologies is a core supplier for the phone's metal frame, speaker, and motor components, deeply involved in its innovative triple fold structure. The flame's value remains comparable to the previous generation at 800 to 1,000 yuan. U.S. August non-farm payrolls fell far below expectations, raising concerns about an economic slowdown that outweighed rate cut optimism. U.S. stocks opened high but closed lower on Friday. The Dow hit an intraday high before falling 409 points, closing down 220 points or 0.5% at 45,400. The S&P 500 fell 20 points or 2.3% to 6,481, and the Nasdaq dipped 7 points to 21,700. The Nasdaq Golden Dragon China Index rose 90 points or 1.2% to 7,842. Popular Chinese concept stocks included Fang Didi, up 32%, Baidu and Alibaba up 3%, and JD up 1.5%. For the week, the Dow fell 0.3%, the S&P 500 rose 0.3%, and the Nasdaq gained 1.1%. Tech stocks performed strongly, with the Magnificent Seven plus Broadcom adding a combined 420 billion in market cap, reaching 21 trillion US dollars, or around 36% of the S&P 500. Alphabet benefited from a favorable U.S. court ruling on an antitrust case, avoiding a Chrome breakup and only requiring search data sharing, also benefiting Apple, whose iPhone retains Google as the default search engine. Alphabet surged over 10% for the week, while Apple rose 3.2%. Broadcom reported a 63% increase in AI revenue last quarter and secured 10 billion US dollars in new orders, driving its stock up 16% intraday, closing with a 9.4% gain. Reports suggest OpenAI will collaborate with Broadcom to design its own chip to meet computing demands and reduce reliance on NVIDIA. Some chip stocks performed well, with TSMC and Micron up over 3% and 5% respectively, but NVIDIA fell 2.7% amid competition concerns. Microsoft also declined, marking 5 consecutive weeks of losses. Tesla rose 3.6%, proposing a massive compensation package for Elon Musk worth nearly 1 trillion US dollars and 400 million shares. Tesla shareholders will vote on November 6 on whether to invest in Musk's privately held AI startup XAI. Meta gained 0.5% with CEO Zuckerberg stating the company plans to invest at least 600 billion US dollars in the US by 2028 for data centers and infrastructure. Meta's July forecast projected 2025 capital expenditure of 66 to 72 billion US dollars, up around 68% year on year, with significant spending expected in 2026 to advance AI-related businesses. U.S. August non-farm payrolls added 22,000 jobs, far below the revised 79,000 for July and market expectations of 75,000, signaling a cooling labor market. Hourly wages rose 10 cents or 0.3% to $36.53, matching July's pace and market expectations. The unemployment rate rose from 4.2% to 4.3%, as expected, the highest since October 2021, with the unemployed population increasing by 148,000 to 7.384 million. The labor force grew to nearly 171 million, with the participation rate rising 0.1% to 62.3%. This week's key U.S. economic data includes Thursday's CPI, which investors will scrutinize for inflation trends and rate cut implications, as well as tariff impacts. Wednesday's PPI report may also reflect import tariff effects, with July's PPI showing the largest rise in 3 years due to surging goods and services costs. Following a U.S. appeals court ruling that most of Trump's tariffs were illegal, the tariff issue is back in focus. Although the Trump administration has requested a Supreme Court review, the ruling adds market uncertainty. Tariff revenue losses could exacerbate the U.S. fiscal deficit, contributing to the sharp rise in long-term Treasury yields early last week. Our stock pick today is Mao Geping. Mao Geping is positioned in the high-end cosmetic and product market, owning two major brands, Mao Geping and Love Keeps, catering to diverse consumer groups. In the first half of this year, the group continued to advance product innovation and category expansion, launching two new high-end perfume series, 活远凝香 and Eastern Whisper Enlightenment, extending its beauty product offerings into the fragrance market. On the channel side, the group continued to enhance brand image and improve store efficiency, further strengthening its high-end cosmetics brand identity. As of June 30, 2025, its product portfolio included over 400 SKUs across cosmetics, skincare, and fragrances. For the first half of the year ending June 30, 2025, the group achieved revenue of 2.588 billion yuan, a year-on-year increase of 31.3%, and net profit of 670 million yuan, up 36.1%. By product category, cosmetics sales revenue reached 1.422 billion yuan, growing 31.1%. Among these, base makeup products performed strongly, with retail sales of the luxury caviar cushion and the luminous light veiling pressed powder, each exceeding 200 million yuan. Meanwhile, the group continued to refine and expand its full range product layout in cosmetics subcategories, launching a new online product, the Crystal Starry Sky Eyeshadow, in March, which achieved retail sales of over 4 million yuan. In skincare, the group's products include face creams, eye care, masks, serums, and cleansers, generating sales revenue of 1.087 billion yuan in the first half, up 33.4%. Two-star products, the luxury caviar facial mask and luxury regenerating black cream, recorded retail sales exceeding 600 million yuan and 200 million yuan, respectively. A new high-end skincare product, the premium nutritive revitalizing lotion, launched this year, achieved retail sales of over 16 million yuan. Recommended buy price is 99 Hong Kong dollars. Target price $108. Stop loss at $94. I do not hold the aforementioned stock.